Welcome, everyone. My name is Rick Watson, and I'm head of the Capital Markets Membership and Events team at AFME. And we're delighted to welcome you today to the launch of the third AFME CMU Key Performance Indicators Report launch. We're entitling this webinar, The State of CMU, What's Next for European Capital Markets. AFME launched its first report in 2018 to provide actual, objective data on how the EU as well as individual member states are progressing on the CMU launched by the Commission in 2015. To do this, we felt it was important to include a wide variety of data relevant not only to AFME members, but more importantly, of course, to many other stakeholders who support the CMU initiatives. We're very grateful for the active participation, once again, of EFAMA, Pensions Europe, FESE, Invest Europe, Business Angels Europe, the European Business Angels Network, European Crowdfunding Network, European Investors and the Alternative Credit Council, European Investors and the Climate Bond Initiative. This report's all the better for their active participation. This report is particularly timely given the launch of the Commission's CMU Action Plan in September. Like many associations, AFME has actively provided input into the high-level forum group's work and conclusion. AFME very much welcomes the Commission's 16 recommendations, which we believe, if implemented, will make a real difference to European economic growth and market efficiency. In particular, I want to quickly point out 4 aspects why this report is unique. It's important, first of all, for all Europeans and stakeholders. We're delighted today that over 360 registrants from across the European Commission, Council and Parliament, member state governments, official sector organizations, Brussels and national trade associations, banks, investors, and other market participants are dialing into this webinar. To us, it shows there's very serious and meaningful interest across Europe, both geographically and by sector, in the CMU project. We're delighted to see that. We're also pleased that over 20 European publications highlighted the CMU KPI report in today's newspapers. The second thing is this report highlights in detail 7 metrics that quantify exactly where progress is and isn't being made in CMU. In particular, I want to highlight the chart on page 12 of the report for those who happen to have a report open. And Julio will have a copy of this in his slides. But I'd particularly like to note that it ranks all 27 member states according to their progress or lack of progress. Notably, in the last 3 columns, rising or falling in their rankings versus each other. In particular, I want to highlight some progress on cross-border integration that's being made over the last few years, although it is slow. That's, of course, a major objective of CMU. And I also want to point out that sustainable finance is such an important plank of the whole CMU project that although progress is being made in both green and social finance, in absolute terms, the percentage of financings that are ESG remains relatively low. So there's a lot of progress that still needs to be made there. The third thing I'd like to quickly highlight is change is happening slower than what I think we would all hope. And this report quantifies specifics on that area. For that reason, AFME fully supports the Commission's recommendation to raise the political ambition of CMU. CMU really does matter. The fourth thing I'd like to point out that this is a living document which will be changed and adapted over time based upon what's happening in the market, but also input from readers. For example, after last year's report, we met with the ECB, who provided a number of very constructive suggestions that we've now permanently included in this report. We'd encourage others to do that as well. In terms of the format for today's webinar, we're delighted to be joined by Marcel Haag, Director of Horizontal Policies of the European Commission. He'll provide some introductory remarks and then join a panel discussion that I'll moderate. In the panel discussion, we're also honored to be joined by Isabel Benjumea, the MEP and Rapporteur for CMU and Parliament's Econ Committee. Again, we're delighted to have her with us today. We'll look forward to her perspectives as well during the panel. We're also pleased to have Tanguy van der Werve, who is the Director General of EFAMA, and Riess, the Director General of FESE, to participate in the panel as well. There'll be plenty of time after their remarks to ask the panelists questions. With that, I'd like to now hand the podium over to Julio Suarez, AFME's Head of Research and the author of the CMU KPI report. Julio, over to you.
Thank you, Rick. Good afternoon, everyone. Perhaps if we can go to the first slide of the presentation. We are indeed delighted to launch the third edition of our annual flagship publication of Capital Markets Union Key Performance Indicators. The report, indeed, as Rick rightly pointed out, tracks the development of the EU financial ecosystem and also keeps track of development across 7 key performance indicators as measured for the EU and each of its member states and also for the UK. The report was produced in partnership with 10 other trade associations and international organizations, which are listed on the slide. These organizations cover a wide range of financial markets activities: private debt, business angels, sustainable finance, crowdfunding, fund managers, retail investors, exchanges, private equity, and also pension funds. We thank them. We thank all these organizations once again for their valuable contribution and at producing this year's report, this year's industry report. Let me just go directly to the main findings of our report. Perhaps if we can go to the next slide. We updated our 7 key performance indicators, which seek to measure progress across 7 different areas of capital markets. So we measure access to finance, household savings, loan transfers into tradable instruments, the depth of the sustainable finance market, pre-IPO risk capital, fintech, and also cross-border integration within the EU and with the rest of the world. Let me just go directly to the first indicator, the market finance indicator. In the area of market finance, we saw that this year, in 2020, we as measured by data and as measured by market activity carried out during the first half of this year, we have seen that the proportion of finance raised by corporates in the form of bonds and public equity actually rose during this year. The proportion of market finance for Euro corporates rose from 11.5% in the total flow of 2019, and it rose to 14.5% in the first half of 2020. This was thanks to unprecedented amount of funding from capital markets instruments during the pandemic, when corporates, of course, needed the most. There are some notable exceptions that we kind of mentioned in the report, and we also mentioned here in this slide. For example, Italian corporates reached historic lows in the percentage of market-based funding from around 7% in 2019 and 2015. That proportion declined to only 4% in the first half of this year. It's also perhaps worthwhile to note some kind of limited progress in the proportion of market finance in the whole EU, from 10.4% in 2015 to around 11.5% in 2019. If we move to the next slide, in the second indicator, we seek to measure the amount of household savings in the form of capital markets instruments. According to this indicator in 2020, with data available only as of the first quarter, we saw a slight decline in the amount of household savings through market instruments as a proportion of GDP, from 104% of GDP to 103% of GDP. But perhaps the most interesting finding in the report, and according to the various data points that we collect for producing the report, we observed a significant increase in the household savings as a proportion of disposable income. We note in the bottom bullet point that we observed at record levels of savings rate of around 16% of disposable income in the first quarter of 2020 compared to 12% in 2019. But what's interesting is not only the increase in savings, in total savings, but the fact that those savings were predominantly invested into low yielding bank deposits. So invested not in capital markets instruments, but households actually saved that record amount of savings in bank deposits. If we move to the next slide, the third indicator, we seek to measure the capacity of financial markets participants to transform bank lending into tradable securities, like securitization, covered bonds, and loan portfolio transactions. We saw in this indicator actually an important increase in the amount of loan transfers in the first half of this year, but this increase was predominantly in the form of covered bonds. Securitizations and loan disposals in the first half of this year actually continue quite subdued. And specifically on securitization issuance has fallen since the introduction of the STS regime in 2019. And also kind of worthwhile to point out that perhaps this is the only indicator where we saw a 4-year decline between 2015 and 2019 from 6.1 and 5.8%. This here measures the total proportion of loans that are transferred in the form of securitization, covered bonds, or loan transactions as a percentage of total outstanding bank loans. If we move to the next slide, we here measure in the slide on fintech, in the indicator of fintech indicator, we basically seek to measure in the form of a composite indicator the capacity of the various member states and the EU to host an adequate fintech ecosystem. In this indicator, which ranges between 0 and 1, we saw an important increase in the indicator value. This is specifically related and directly related to a significant improvement in public sector initiatives to facilitate fintech innovation. We noted that 7 European countries, 7 EU 27 countries more specifically, launched innovation hubs, fintech innovation hubs over the last year. And Malta, which is the only EU 27 member state which has not launched a supervisory innovation hub in the local fintech ecosystem. We noted most recently that Austria, and there are other EU member states where they have ongoing initiatives on launching a regulatory sandbox. But specifically for Austria, as the sandbox was only launched in September of this year, we didn't include that observation in the indicator value. But worth to note that both from an innovation hub and from a regulatory sandbox perspective, things are progressing in the right way from a fintech ecosystem and supervisory perspective. We're also considering the indicator the fact that the EU also launched the European Forum for Innovation Facilitators, which will also help coordinate fintech experiences between member states and supervisory experiences in the fintech area between member states. We note in the slide and in the report that investment into EU 27 fintech companies continue relatively small compared to other jurisdictions, which continues a challenge for the EU 27 ecosystem. We move to the next slide in the important area of sustainable finance. It is undeniable that Europe and the EU 27 and the EU continue as the global leader in the area of sustainable finance. We know that 52% of global sustainable bonds or global bonds that were labeled sustainable were issued in Europe in the first half of 2020. And according to our indicator, however, the proportion of newly originated bonds that were labeled sustainable declined. So that's the proportion of sustainable bonds as a proportion of total bond issuance. That proportion actually declined from 5.6% in 2019 to 4.3% in 2020. But this is directly related to our first indicator where we show that actually, total bond issuance has reached record volume. So from that perspective, as a proportion of total bond issuance, the proportion of total sustainable bond issuance actually declined from 5.6% to 4.3%. But in any case, ESG bond issuance, sustainable bond issuance, continues resilient and is on track to reach a new record in this year. And specifically with the rapid emergence of social bonds, which is kind of a new feature in the middle of the ongoing pandemic. If we move to the next slide, in terms of availability of risk capital for SMEs, we observed in this year that, for SMEs, actually, according to our indicators, bank lending has consolidated as the main source of funding for SMEs. The proportion of risk capital investment to total new funding for SMEs declined from 2.6% to 1.8% for Europe's, for the EU 27's SMEs, from 2.6 to 1.8% in the first half of 2020. And of course, this will be crucial. It will be crucial that SMEs actually have the capacity to raise funding, not only through bank lending, but it will be crucial in going forward as Europe recovers from the economic hardship caused by the pandemic. It will be crucial that SMEs raise funding not only through bank lending, but also from equity risk capital and other forms of risk capital. If we move to the final indicator that measures cross-border finance, we noted, according to our indicators, that actually cross-border finance and actually cross-border integration with the capital markets integration within the EU stood quite resilient in 2020. Companies effectively raised finance within the EU. And just one specific data point, 96% of new non-financial corporate bond issuance was marketed across Europe, as opposed to being marketed only within the issuer's country of headquarters. So this, this is quite remarkable, which compared to previous crises, we actually observed that actually cross-border funding flows within the EU were quite disrupted and performed quite in a disruptive fashion. We observed that in the financial crisis, but also in the sovereign debt crisis. But unlike previous crises, we observed, according to our indicators, that intra-European cross-border capital markets activity continued quite resilient in the first half of 2020. Cross-border integration with the rest of the world, however, just slightly deteriorated as measured by our indicator. If we go to the next slide in the report, as Rick rightly pointed out, we produce a few country rankings. We basically rank each of the EU 27 member states and the EU and the UK according to our indicators. Here in the slide, the ranking position is color-coded with the top 5 countries color-coded in green and the bottom 8 countries color-coded in red. Perhaps to note from this year's report, we also have in this slide a comparison with the average ranking of the first 2 KPI reports of 2018 and 2019. But interesting to point out that, UK and Northern European countries continue perhaps leading the top of the rankings, kind of color-coded in red. CE countries, Central European countries continue perhaps at the bottom of the rankings as measured by our indicators. Finally, if we move to the last slide, I just wanted to mention that in the report, we also listed a few policy recommendations. I'm not going to go into the details of all the 7 policy recommendations, but they are in the executive summary, and we hope indeed that they contribute to the further work that needs to be done to continue building a European capital markets union. With that, I thank once again the trade associations that partner with us and the partner with AFME in producing this report. And we look forward to next year's report as well and continue our partnership. So with that, I hand over to you. Thanks, Rick.
Well, Leo, thanks so much for that. I think everybody in this call will be join me in saying this is a remarkable amount of data that you pulled together, you and your colleague Mac Johnson and the other trade associations. And there's a lot of really good content, even beyond what you've highlighted in your summary. So I'm sure that we would welcome comments, questions from those who are participating in this call today and others. There's some certainly encouraging data in there, particularly the one I heard was 96% of transactions were marketed cross-border, which I think is a pretty impressive and good progress in terms of integration, even though some other indicators aren't moving as quickly as we'd all hope. With that, I'd like to change direction a bit and turn the program over to Marcel Haag, who's the Director of Horizontal Policies at the European Commission, for his thoughts on the Commission's CMU Action Plan. Marcel, over to you.
And thank you for the opportunity to talk to you this afternoon about the Capital Markets Union and having the opportunity to discuss with you. Let me first say that the Commission welcomes and appreciates the work we're particularly interested in this work stream as we, as the Commission, are also facing the expectation to provide a more stable tool to track developments and benchmark the effectiveness of our CMU policies. And obviously, if we want political traction, we need to be able to demonstrate that CMU makes a difference on the ground. And that is what the KPI report is actually trying to sustain. I would like to share some thoughts with you about the state of the Capital Markets Union project, and then also comment briefly on some of the findings of the report. CMU has probably never been more needed than in the pandemic, which means that, among other things, an economic environment with low growth and soaring unemployment. President Ursula von der Leyen, the Commission President, pointed out in her State of the Union speech, and I quote, "We must now use this opportunity to make structural reforms for our economies and complete the Capital Markets Union and the Banking Union. Deep and liquid capital markets are essential to give businesses access to the finance they need to grow and invest in recovery and in the future." End of quote. And I think this says it all when it comes to the importance of CMU at this stage. But now, how can deeper and better integrated capital markets play a key role in fostering the post-COVID economic recovery? First, integrated capital markets can provide companies with more equity and equity-like funding with a greater overall funding mix. In view of banks' declining capacity to provide credit and rising debt levels, firms need to tap equity and other capital market instruments to prop up their financial structure to avoid overburdening their future growth. More equity funding, in particular, would help absorb better the long-term damages of symmetric shocks, such as a pandemic. Secondly, capital markets can and should provide citizens with more and better investment opportunities to benefit from the structural changes that our economy is undergoing. They can create positive effects via improved long-term returns for pension schemes. The move towards a more sustainable and circular economy is an important driver in this respect. Indeed, capital markets can help the economy adjust to sustainability and digital challenges. We're thus in desperate financial players that are able to price sustainability risks. The Green Deal projects will have to tap market funding for the foreseeable future and need to have access to a deep and liquid market for green bonds with large and active capital market players ready to step in. Moreover, by offering more flexible funding for companies, capital markets can provide targeted funding for firms that aim to innovate or to grow, which helps to promote Europe's global competitiveness. Last but not least, capital markets are also a priority for the stability of our financial system in a pandemic. For instance, the lack of liquid and large high-yield bond markets in the EU has reduced the availability and effectiveness of policy interventions to stabilize markets right in the worst moment of the crisis. While in the US, the Fed was able to act more swiftly and in large amounts due to large availability of capital market channels, the ECB instead could only rely on bond purchases of a few large corporates which create a funding disadvantage for small and medium-sized firms. Overall, the larger the role of markets is in the allocation of capital, the more our economy will be able to adjust to new supply and demand conditions and technical progress. Ladies and gentlemen, a few weeks ago, we launched our new action plan, which comes after months of discussion with stakeholders through our high-level forum on CMU, chaired by Thomas Wiese. Our action plan aims to advance the CMU project by firstly supporting a green, digital, inclusive and resilient economic recovery through greater capital market access by European companies. Second, by making the EU a place where individuals have greater access to long-term investment opportunities. And thirdly, by further integrating national capital markets into a genuine single market. Let me look at some of the measures included in our action plan. We're determined to make any type of company data easier to access and more comparable. So we aim to create a single access point for company data across the EU. This is a major step to increase accessibility to financial and non-financial company data of publicly listed companies. It will also provide a clear role to ESMA to coordinate and centralize this effort. We will continue our effort to reduce the cost of access to capital markets for SMEs by further acting on rules that affect direct and indirect listing costs, without at the same time reducing the level of transparency that capital market investors need. We need to diversify the investor base and increase the engagement of institutional investors such as insurers. So we plan to make equity investments for such actors more attractive. The upcoming review of Solvency II will provide an opportunity to ensure that the prudential framework appropriately reflects the long-term nature of the insurance business and mitigates the impact of short-term market turmoil on insurance solvency. We want to make Europe a more transparent and cost-effective place for retail investors by reducing the informational overload, improving the quality of disclosure, and increasing the quality of investment advice. We seek to improve the weight of long-term investment and have identified incentives to save and invest for retirement. For this purpose, we aim to develop a pension tracking system that provides households with all they need to know in one place and investigate further measures with neutral fiscal impact. We need to tackle administrative and legal proceedings that hold back cross-border investments. In the CMU action plan, we plan to address those barriers that we identified as most significant, meaning, amongst others, finally, delivering on the simplification of withholding tax procedures through common standards across the EU and by reducing differences in selected aspects of non-bank insolvency proceedings. We need to make progress on supervisory convergence with a more consistent application of the single rulebook for financial markets in the EU. Irrespective of where access to capital markets is, there should be no difference on how rules are applied to market operators that have the same characteristics. Next year, we will make a thorough assessment of where we stand in terms of supervisory convergence and what needs to be done next. But we should also be realistic on what to expect as we move forward. Deepening capital markets in the EU is a complex and lengthy process. It involves changing legal systems, market structures, and financial industry practices and organization. We have to accept that a much more integrated landscape of capital markets cannot be built in a single stroke, be it the 2015 action plan or the action plan that we just presented. Compared to the banking union, CMU requires intervention on so many levels that it cannot be achieved through a big bang solution. We will continue to move step by step in all areas where legal and non-legal barriers to the free movement of capital still exist. The new action plan builds on the work done with the 2015 action plan, raising further the ambition in areas like long-term investments, quality of investment advice, and rules to listing on public markets. The new action plan also expands into new territory, such as company data, company law, pensions, and financial literacy. So the scope of the action plan has not only been widened, but also deepened. As the Capital Market Union advances, future action plans will most likely continue along this combination of deepening and widening EU policies to achieve the most effective outcome. But there should be no doubt there are no expendables in this action plan. As we face many vested interests, let me emphasize that all the measures that are key to achieve the CMU are necessary and have to be implemented according to the timeline suggested in the action plan. Preparatory work on the more structural measures, such as tax procedures and non-bank insolvency proceedings, need to start as soon as possible, as they will take time to be completed. Finally, for this action plan to be successfully put in place, we also need the full cooperation of both the member states, the European Parliament, but also of all other stakeholders, including the industry. Let me make some remarks now on the very interesting CMU KPIs report. This is a very useful way in which the industry can cooperate with us and support our work on CMU, not only in the coming months, but also as we go forward. We would like to continue to support you in this effort by providing tangible evidence of the progress made. The report provides public accountability and transparency on EU policy making, which is very welcome, and which puts pressure on policymakers to deliver on their commitment. I'm glad to see that all the indicators, except the indicator on risk capital, have improved since we originally launched the CMU project in 2015. Amongst others, our work on sustainable finance has put Europe at the forefront of policy making in that area worldwide. It's good to see that we are well on track. We also need to understand more thoroughly why risk capital is still not growing at the pace we want to see. Our new framework for crowdfunding platforms, which will enter into force in the coming days, is a good example of how we would like to see this market to scale up. I'm also interested to hear your views on this matter. Another key indicator for us is the measure of how capital markets are supporting the banking system in the management of credit risk. Given lower revenues and rising indebtedness of large parts of the economy, we anticipate another spike in non-performing loans. Having more developed markets for covered bonds and securitized products, as well as secondary markets for NPLs, would contribute to the stability of the financial system as a whole. So let me conclude by saying that I'm glad to see in your report that we begin to see some positive signs that we were hoping for. But of course, the progress is far from being sufficient to consider our job done. Let me stop here and thank you again for inviting me, and I'm looking forward to the panel discussion.
Marcel, thanks so much for your insights and your perspectives from the Commission's standpoint. We're already getting questions through our Q&A button, and I wanted to mention to everybody on the phone here, there is a Q&A button on the right-hand side of your screen, and after some initial remarks by the panelists, we will be opening the discussion to Q&A. So for those of you who sent comments and questions so far, we're certainly holding those and we'll get to them. We've also received a question about how to get a copy of the report. For those of you on a screen, which by definition you are, please go to afme.eu, and if you click on the box in the upper right-hand corner, you can get a direct link to the KPI report there. so you can look at materials while we're reviewing the next panel discussion. With that, I'd like to turn the discussion to our panel. And the topic for today's panel is broadly, what are the opportunities as what are the obstacles as well to further progress on CMU? Marcel, I think, has rightly highlighted some good progress in a number of areas. Certain areas, SME, equity provision, you flagged as an area which we do need more progress on, and I'm sure it'll come up in the panel. Our first panelist is Ms. Isabel Benjumea, who's the MEP and Rapporteur Econ Committee on the CMU file. And we're delighted to have you here today and honored that you could join us. Be delighted if you could provide your perspective, Isabel, on CMU generally, how you look at the priorities, the politics, both positive and negative, that you see within the Parliament, and maybe any insights for the rest of the panelists or the industry. Isabel, over to you.
Thank you very much for the invitation. It's a pleasure to be here. I'm glad to see Marcel again. Every weekly we have the opportunity to be together in these kind of events, and I always learn from what he explains and from the job that the Commission is developing. So thank you for the invitation. In order to, I think that to give you a broad perspective on how we see it from the Parliament, let me tell you a little bit how the report of which I've been rapporteur took place. As you very well know, the first time Marcel referred to it, there was a first action plan in 2015. Follow it, there was the announcement that a new action plan was going to take place, so the Parliament decided to has its say on it and prepare this report. The main concern of the report of the Parliament, which is a part of the report, is that a lot is still needed to be done, and that we lack concrete timetable and concrete measures yet on the table. As Marcel said, this is not the banking union. There's a lot of things and a lot of topics and a lot of issues which are involved in it, but clearly there are certain topics, certain issues that need to have concrete measures and concrete deadlines in order to overcome those obstacles. What we wanted to focus on, especially taking into account the huge social and economic crisis that is following the pandemic, was the need to really deliver to the European citizens, to the small retail investors and to the owners of the SMEs, and also for those new entrepreneurs who are taking the decision to start a new business, to give them an alternative, an alternative in order to find new ways of investment and also new ways of finding the equity and not having to rely that much on the debt. That's the core of the report, giving solutions in order to find the necessary liquidity for the SMEs, but also giving more alternatives and larger options for the retail investors and trying to bring more capital into the European capitals. We focused in seven main aspects, which I will just briefly go through them. And many of them, we share the views of the high-level forum, and also we share the views of the action plan of the Commission regarding how important this instrument, the Capital Markets Union, is for financing business. Well, if we really want it to be a tool in order for the business to be able to finance themselves, we need to get rid of a lot of bureaucracy, a lot of obstacles. We need to make it simple and accessible. And reality is that at the moment is not like that within the European Union. Then it's essential to promote long-term and cross-border financial products, and that's something that I've heard Marcel many times refer to, which I agree with the Commission's view, and I agree with the Commission's proposal in the action plan regarding how important this is. We really need to be able to make profitable and attractive incentives for these kind of investments. And again, we need to get rid of the obstacles and which right now are in place in the European Union. Then we address one of the most difficult aspects of or obstacles for the Capital Markets Union, which has to do with market infrastructure and has to do with supervision. I know this is not easy, it's not an easy topic, but from our perspective, from my personal perspective, unless we are able to have a single supervision, and then we can have a single framework, and then we can move into a real harmonization of the legislation, we won't be able to move forward. And this is something that I know that is not easy, and this is one of the things that I was mentioning before, that we really need to be able to set concrete deadlines and be able to, at least to encourage the member states and the stakeholders to deliver concrete measures. As I was saying before, retail investors are absolutely key. For two reasons. We need capital to enter the markets. We need to have more flows of capital, and we need and I think it's wise to give them a broader and a larger option of investments, and that's essential to have a competitive capital markets within the European Union. But we lack two things. We lack confidence and education and financial education. So there's not the culture for this kind of investments, but also we don't have an attractive, and the retail investors don't find these markets as secure, accessible, and easy investment. So that's something that we really need to tackle, and that's something that actually, from my perspective, financial education, it's one of the key things that we need to work within the European Union. Then we also make a small reference to digitalization and data, because there's already another report of the Parliament who addresses the importance of this digitalization. But let me just say that we really need to create an environment that allows for innovation. And one of the measures that we have in the report, which I think personally is very, very attractive, is be able to create a pan-European sandbox for this kind of investments, which I believe it would be very useful. And finally, but not least, we are saying we need the Capital Markets Union to be a reality in order to give more options for the retail investors, and also to give alternative financing options for the SMEs and for the entrepreneurs, and that's for sure. We are saying that we need to have a clear market infrastructure. We are saying that we need to be able to tackle the obstacles and to get rid of the burdens and make it simple and accessible. But the most important thing is that we need to deliver a competitive capital markets union at the global level, especially taking into account that Brexit, it's a reality, and it will, unfortunately, and I'm sad that the UK is leaving the union, but it's a fact. So we'll have a new competitor that also, it can be an ally, it can be a partner, but for the time being, we need to really understand that we are losing a very important player. We really need to be able to create a capital markets union that competes globally in order to attract foreign capitals, and also in order to attract foreign companies to come to our markets and seek for the capitals within within the union. And that's key. That's key. And I always use this example because I had it on my own experience. I've been an entrepreneur most of my life, and when I started up my company, I didn't consider getting into the capital markets of the European Union. I went into the US. It was faster, it was easier, and it was the kind of product I was looking for. So we really need to really reconsider and understand that it's not only that we need to really get the freedom of movement of capitals within the union and make it a reality, but also that, especially in these circumstances, we need to become competitive, we need to become a champion, if you allow me, in order attracting capitals, and that's not possible with 27 different legal frameworks, with 27 different supervision at the member states. The European Union is the great example of harmonization, of the success of harmonization, of the success of how, when we get together and we allow the freedom of movement within the union, is a success. Well, we really need that to be a reality with the capitals, with the capital markets as well. So we encourage the Commission. We really appreciate and value positively the action plan of the Commission, the 16 measures. but we encourage the Commission. I know it's not easy. I know there are many stakeholders involved, but we really encourage the Commission to move forward with a concrete timeline and concrete measures. And we are at the disposal of the Commission and also at anyone to continue pushing further. Actually, there is a possibility that another report will come shortly, and we will definitely be working in this line. So thank you very much.
Thanks very much, Isabel. There's a lot there that you went through. And in particular, we're interested in your perspective as an entrepreneur, has set up her own business, finding a number of obstacles that you ran into. So lots of food for thought there that we'll definitely be coming back to. I'd like to next turn the podium over to Tanguy van der Werve, who's the Director General of EFAMA from the fund management industry, provide his members' perspectives on CMU, what's working so far and what needs to happen next. Tanguy?
Thank you very much, Rick, and good afternoon to everyone. For those of you who don't know EFAMA, we are the European Fund and Asset Management Association. We represent the asset management industry. Our members are 28 national associations and 60 corporate members distributing funds and managing assets across Europe. As EFAMA, we are very supportive, obviously, of the CMU initiative and have been since 2015. Clearly, these decisive actions are needed to make CMU a reality, and it's very important that the entire financial services industry gives it its full support. Looking at the new action plan, we support the focused approach taken by the Commission and the various actions being considered. The emphasis on supporting the development of local capital markets is particularly welcome. For the purpose of my intervention, I will focus on a couple of points which I believe are worth raising. On public equity, as already mentioned, I think by Isabel, there is way too much debt in the system and not enough equity. So we do need vibrant European public equity markets, and we welcome the European Commission's efforts in that space. This is particularly important for UCITS. On retirement savings, there is an increasing retirement savings gap in Europe. This is a real pension time bomb, and this could give rise to potential unrest going forward. It is a massive social challenge, and not enough is being done in some member states. So we note in the action plan that the Commission intends to facilitate monitoring and develop best practices. In our view, it lacks a bit of ambition and teeth. So we recognize that there is a limit to how much the Commission can do in that space. But, we would maybe suggest that the monitoring of the Commission feeds into the European semester process, as will be done for the efficiency of national insolvency regimes, as mentioned in the action plan. The PEP, the Pan-European Personal Pension Product, was part of the previous action plan. Our members, the asset managers, are telling us that they are unlikely to enter the PEP market, given the restrictions applying to the basic PEP. This, we believe, is a missed opportunity. On tax, withholding tax relief procedures remain very complex and a clear obstacle to cross-border investments, so we welcome the action envisaged by the Commission on that. It's not so much about tax reclaim, it's also about relief at source. So we are positive. Also, companies still have a huge incentive to issue bonds more than shares, and as long as this is the case, progress towards a kind of equitization of our economy will remain very slow. And it seems to me that we have been discussing this issue for more than 20 years now. We see very little progress. We are also concerned that new taxes will eventually be raised by the member states, and that those may affect investments, in direct contradiction with the CMU objectives. What we need is not more taxes, but more tax incentives, especially for long-term investment products. On fund regulation, we welcome the focus on LTIFs, and we believe there is potential to make LTIFs a success, provided the right incentives are in place. On a separate note, and given the importance of UCITS and AFEs in channeling savings to long-term investments, we hope that the debate around delegation will not be politicized, and that delegation as we know it today will remain possible. This is absolutely key to the continued success of UCITS and AFEs. On the single rule book and supervisory convergence, We welcome the focus on enhancing the single rulebook and promoting further supervisory convergence. This will obviously facilitate cross-border activities, provide scale, and allow the European financial services industry to become more competitive. That said, we are somewhat surprised that the debate on the supervisory architecture, and especially on the direct supervisory powers of ESMA, has resurfaced in the context of the AFMD review consultation paper. We would have expected this debate to take place once the EFSF regulation or the ESAS regulation is up for review, which is at the end of 2021. On institutional investors, we very much welcome the Commission's aim to incentivize long-term investments by insurance companies, but we do hope that the Commission will live up to the market expectations once they receive the advice of EIOPA in due course. And frankly, I think that the priority should be on the institutional investors, be it pension funds or insurance companies. This is likely to be much more impactful in the short term than trying to increase retail participation in markets. And this is a long-term effort, whereas we can take decisive actions when it comes to the institutional investors. On financial stability, on financial company information and sustainability-related information, this idea of a European single access point is an excellent one, and we would recommend the Commission to prioritize this action, especially given the importance of allowing our industry to discharge their obligations under the Commission's Sustainable Finance Action Plan. On secondary markets, liquidity needs to be improved, especially in the corporate bond market and the CP market. The market-making capacity of banks has reduced substantially following the adoption of new prudential requirements. So we welcome the Commission's intention to promote market making by banks and other financial firms. We need to distinguish between fund liquidity and market liquidity. The events of March this year have demonstrated that the liquidity of funds is properly managed and that the existing regulatory framework is robust. What needs and must be improved, however, is market liquidity. On securitization, despite all our joint efforts, the financing of our economy will remain mainly bank-based for quite some time. Reviving the securitization market is a priority. For the buy side, this represents an interesting asset class. It gives access to new exposures and offers interesting diversification benefits. On retail participation in capital markets, we very much welcome the envisaged actions in the field of financial education. The opportunity cost of staying invested in bank deposits is huge. But we know that the Parliament and the Member States share the view that financial education is key. So it seems that there is an increasing level of awareness, which is very good. This is, of course, not enough, and there is also a need to improve disclosures to investors. So we know that the Commission will come up with a retail investor strategy in the first half of 2022. We like that, as there are a number of inconsistencies across various pieces of legislation that need to be removed. That said, we cannot wait 18 more months to fix the PRIPS flaws, especially given that the UCITS exemption expires in 14 months. We simply cannot afford to let the PRIPS kit damage the well-functioning UCITS kit. The entire European fund management industry is begging the Commission to do something about this and give a clear signal that this will be taken care of. This has been a huge distraction, and frankly, if you allow me, this is not reflecting properly on the EU institutions. On inducement, we take note that the Commission will carry out an assessment of the applicable rules. At this stage, we would just flag that it is important to ensure that retail investors still have access to advice, to avoid a so-called advice gap. A complete ban on inducements is not the holy grail that some think it is, also cost-wise for the investors. That said, we all agree that advice must be fair and potential conflicts of interest duly managed. On better regulation, we welcome the reaffirmation of the one-in, one-out rule. Ever increasing regulatory costs is a source of major concern, especially for the smaller market participants, of which there are many in our industry. On monitoring, we welcome the envisaged use by the Commission of targeted indicators to monitor how EU capital markets are evolving. We welcome the reference in the EP report on employee share ownership, and we indeed, with the Commission, call on the Commission to explore initiatives to incentivize such schemes. Finally, concerning the implementation dates, this action plan will lead to a number of new legislative initiatives by the Commission. For some, level 2 measures will be required, and we call on the Commission, but also on the Parliament and the Member States to consider using dynamic implementation dates. So I will just stop here, Rick, back to you.
Tanguy, thanks so much. There is certainly a lot there as well. So we're going to have a very robust discussion in a few minutes. I'd like to next turn things over to Rainer from FESE for your perspective. A lot has been said during this panel on equity, your priority, of course. So over to you.
Well, thank you, Rick and AFME, for having me. And just to briefly introduce FESE, we represent 35 exchanges in 30 countries with around 8,500 listed companies. And also thank you to Isabel, Marcel, and Tanguy for your perspectives on the report of the European Parliament and the CMU Action Plan. I think as FESE, I probably, not much to your surprise, can only say that we very much support everything said so far. And I think the CMU Action Plan, I think, is a very good start to truly make a CMU happen, and I think to develop and deepen it. I also want to compliment really Isabel for her strategic vision for the EU 27 she just outlined, and that in my view the EP report really covers. I think it is important that we really think how the EU 27 strategically needs to position itself. And I have to say, and I understand the Brexit negotiations are going in, that's an element I would expect to be probably added to the CMU Action Plan once Brexit talks have finished and we know which way to go. I probably won't go that much into the details of the CMU Action Plan because I think Marcel and Tanguy have already covered that. But I think it is a project, and I'll probably stay more on what Isabel has said there. I really think this is truly important, forging ahead with a project that will unite and shape an effective European Union capital market strategy. I think we need to be much bolder and more comprehensive to achieve the goal. When I see that household savings in capital market instruments, and that was one of the KPIs, are a little bit lower this report than in the last one at 100% of GDP. We have to say we've done a lot of great things in the last 5 years, but holistically they have not delivered. So I think we simply need to be collectively be thinking much bolder and much more visionary on where we need to go and how we can really build an economy, a stronger Europe that will better serve its citizens. And I think that's really the headline of this. And Rick, you said I very much stand for equity, and I would say yes, absolutely. And to me, that is really one of the large missing pieces in a holistic vision in the CMU Action Plan. Marcel rightly said in his introduction, we need equity as a buffer for exogenous shocks, and that will be needed more than ever after the crisis. So hence, I think public equity markets can, of course, help companies weather the crisis and finance their post-crisis growth. And I think so far, I've really said motherhood and apple pie. But I think very much as Isabel said, with Brexit and COVID changes the landscape. We've just had another crisis after the financial crisis where we've seen that really more liquid and more efficient market in the EU27 are paramount. And we need a vision, and I think Isabel rightly said that, how the EU27 can compete globally and I think provide its businesses and its citizens, I think the economy that obviously will award them with the benefits we know equity can bring. So I think when I really looking at the CMU action plan, what surprised me that the very core legislative package that governs capital market, MiFID II and MiFIR, is not included, and that it is not a core part with a vision of how this is supposed to function. And even more, that I think we've delayed the review now to Q4 2021. And I think, Tanguy, you used strong language around PRIPS. I probably want to do it here around MiFID, MiFIR. You know, we risk really having the same thing as in the financial crisis. We'll start reviewing in 21. It may drag into the next legislative session, and that will ultimately mean we probably will be again 8 or 10 years after the crisis, where the lessons learned and the things that we need now post-Brexit, post-COVID, to be there. So I think we simply can't afford to wait. We need very soon in the new year, I think, a holistic strategy where EU capital markets need to be, where primary and secondary markets need to be. And I think also Commissioner McGuinness highlighted that, Marcel said that, and what also Isabel said, we need better access, and I would fully agree, we need to think how to make things more simple and more accessible. And Tanguy called for better liquidity, and for me, really the call there is simplified market structure with the objective of achieving really improved levels of transparency and of strengthened price formation in the EU27. We need to really empower investors to see 100% of the transactions that took place and be able to verify what best execution is. And I think this is a lack of transparency in EU equity markets, which is quite deeply rooted in my view, in a quite flawed equity market structure, contrary to the original aims it has. So I think that's really something, in my view, we need to fix. I think on the other points mentioned, I'm probably not going to go too deep into them, but I think really simplifying listing rules, having the SME IPO fund, a common standardized withholding tax, the single access point, and many other things. They're very, very important, and you know, I certainly don't want to diminish them. I just think the core problem within MiFID II and getting it right is something we need to put also at the core of the CMU project in order for the economy to be more innovative, to be more competitive, to be more liquid, and to be ready to face global competition head on. I stop there.
Great. Thanks very much, Rainer. Certainly you bring up a lot of very good points on market structures, the need to connect MiFID with CMU, how important the market structure is to the overall efficiency of the capital markets. And there's lots of differences of views on how to get there in terms of efficiency, price formation, disclosure, all those kinds of things. And certainly many associations will be having active discussions on those in the run-up to the MiFID review next year. But those are all, I think, important things to look at. With that, I'd like to turn into the Q&A portion of this discussion. And for those of you who dialed in, there's a Q&A button on the right-hand side of your screen, and we're already getting quite a few good questions. The first question I'd like to pose, particularly to Marcel and to Isabel, but because I think Tanguy and Rainer have already covered a bit of this, is there's a question on prioritization. One participant asked, of all the recommendations in policy action highlighted by the speakers and at the high-level forum, which measures, from your perspective, should be prioritized, considering the political capital is limited and not all the actions can be taken at the same time, and why? Maybe, first of all, maybe starting with you, Isabel, what would be your top 3 or 4 priorities on your list, and why, politically?
Yeah, can you hear me? Yes.
Yeah,
well,
you.
that's. I think that was brought up during the discussion in terms of choosing those priorities. For me, the most urgent thing has to do with legal harmonization. I think that the huge confusion that the SMEs and the retail investors face whenever they want to invest in the different capital markets within the union. It's the lack of simplification and the lack of clarity of the legislation. Though we need to focus on that. That would be one of the priorities. The second has to do with incentives. I truly believe we need to focus on creating the adequate incentives in order to bring the capital and encourage the retail investors to invest. And that also goes hand in hand, again, with simplification. Simplification. It's too complex and it's too expensive. And it's seen and viewed as something only for the big players. And I think that's key. That's key. So then in focusing on concrete measures from the action plan published by the Commission, I would really choose three that I always say it, but I will focus, and I truly believe they are very important. First of all, would be being able to get rid of all the tax burdens that right now we have in place, and I think that's very important. It has to do with all the right now, one of the most things that we hear, because we have had a lot of meetings with different stakeholders, not only from the financial sector but also from the SMEs organizations, and one of the biggest burdens is the tax burdens, and that's already in place in the action plan. Then everything that has to do with the single access, which has been said by some of the participants, and I agree, totally agree with that. Everything that has to do with the capital requirement regulation, which I believe those measures could be implemented easier than others, and they are very important. And finally, securitization, the regulation regarding securitization, which I believe is very important. But all of this has to do with making it simple. We are members of a single market, and I think that we really need to create a single market for capitals. We need to be able to make it really, really simple. We need to make it clear. We really need to make it safe but unattractive. And right now, the tax burdens, there's not a single regulation, and there's a lot of and I truly believe that securitization is key in order to make it more competitive.
Thank you very much. That was very clear. Marcel, any thoughts?
Can you? Yeah. As usual, I agree with Isabel, and I think she put it very well. And I think from a Commission perspective, I can fully support what she said. But I would like to also make a plea for taking into account the nature, or the very diverse nature of the initiatives that we are proposing in our action plan. Some of them can be implemented much faster than others. Some of them need significant preparatory work. If you look at the initiatives that we would like to take in the area of pensions, but also in the area of taxation, this will simply take a lot of time. Nevertheless, these are priority measures, but it doesn't mean that when we prioritize those measures that we can leave other measures that are perhaps less impactful, that we can leave them aside when they can be implemented much faster. So my plea would very much be to work on these measures according to the timelines that they require, and take the initiatives that can be taken fast, that we take them now, even if other measures will be more impactful in the long run. Some of the measures that we are proposing are very impactful, but are slow burning and require simply more time. And by prioritizing these, we should not deprioritize the low-hanging fruits that we can reap.
Thank you very much. That was very clear. Marcel, any thoughts?
Can you? Can you? Yeah. As usual, I agree with Isabel, and I think she put it very well. And
Thank you. Getting quite a few good questions. One of the questions coming up is, where are the retail investors in the CMU action plan? And I think what the questioner is asking is, I think all of you have mentioned the relative importance, either positive or not so important, of getting retail involved to address the issue of how to get more money into the European pot in order for investment. And I know, remember, Tanguy, I think you had some very clear views that the institutional market is ready now. It's a lot faster. But I want to raise the question both with you and maybe particularly with Rainer first, and then please, Isabel and Marcel jump in. What is holding back the retail investor across Europe? There is I think all of you have mentioned to different extents the financial literacy question, but is there more can be done to motivate and incentivize retail to really put their toe in the water?
Well, I think yes. Yes, maybe if I start, financial literacy was mentioned, and obviously that is the key. And I think we have some of the worst and best performers within the EU. There's striking differences between young, old, men, women, educated, less educated people, etc. And that is an educational effort that certainly needs to be tackled. So I think it's good that it's in the action plan. And Marcel said there's powerful instruments that take a long time. Realistically, that will take a generation. When I was with 15 years an exchange student in the US, at the dinner table, people discussed their pension savings investment strategy. In Europe, I think these kind of discussions today are still rare. So a very important one. But I think what Isabel said is really, to me, the thing we can do now. And I think to raise investor participation, we need well-regulated, simple, affordable, liquid, transparent tools, and I think that's equities, that's bonds, that is ETFs. And I think what investors need is really a choice of well-regulated instruments that are simple to understand, a diverse way of accessing the markets, and really transparency in a cost-effective manner. And I think if we design a little bit more markets in that fashion, and get rid of a lot of the complexities we currently have and of the intransparency, we'll do a good job to really incentivize retail investors.
Okay, thanks.
If I may,
anybody else want to take that question?
Jump in for a second.
Please.
I do believe that financial education is key, as Rainer was just saying. But not only for the retail investors, but also for the SMEs and for the entrepreneurs, because many of them even do not consider the option of accessing the capital markets when they are seeking finance and they are seeking the investment they need. So I think it's essential, but that takes a lot of time. So in the meantime, the only way is to help them finding these options attractive and easy to understand. And by entering the market, by playing in the market, by feeling that it's secure, that it's accessible, that it's simple, that there are broader options for both investment and also for financing, then little by little there'll be more interest in getting the right financial education. So I truly believe the key element is to make it attractive by making it secure and simple.
Thank you. Actually, a related question that's come in is institutional investors are a key provider of capital to equity funds, but they're also investors in sophisticated funds. These are often, despite their experience and knowledge of the market, still considered as retail under the trading-oriented MiFID rules. To what extent is recategorization a priority? And I think this, Isabel, gets to what you were just mentioning, is how do you, and one of the other questions I was going to ask at some point is to really highlight the progress isn't being made in providing equity to SMEs. Is it a client categorization problem? Is it a tax incentive problem? Is the pot of money across Europe simply not big enough? are the pots of money that are available, for example, from business angels, one of the partners in this group, is that pot of money not big enough, and is it not going across border? Are there language and legal harmonization barriers? What exactly is the barrier for SME equity? Thoughts from anybody?
I think it's a combination of all of those, and that's the big problem and the big challenge, actually, because there's not a concrete problem with an easy answer. Regarding the categorization of the investors, we do have in the report the idea of the semi-professional investors. I do understand that it's the purpose of trying to have these different categories of different investors, but what I really don't like is that if we limit the possibilities of investments for the retail investors because we just consider them too small, we are not letting them understand the huge possibilities that these kind of markets can offer them. And I'm talking, as we were saying before, about the pensions, about the mortgages, about there are many options that they should also consider. And right now, if we treat them as like kids in the market, they will never have the big ambition to enter the market with the determination and with the capital flow that I think that the retail investors could do good performance in the European market. So I'm not that friend of the different categorization. I'm a better friend of making it, as I was saying before, attractive, simple, and secure.
All right, thank you. Anybody else want to take that question?
Yeah, Rick, maybe just to comment on what Isabel said concerning the retail investors. We keep talking about in terms of investor protection. And of course, we do need very high, investor protection standards. But I think that, we should avoid putting off investors. We should talk in terms of investor or consumer empowerment. We need to empower people to make informed decisions. And so this is about disclosure, financial education, fair advice. But, let's move from consumer protection to consumer or investor empowerment. If you keep, protecting people by giving them, 5-pagers full of details that basically they don't even read. If they read it, they don't understand it, or they don't use it for comparing one product with another. This is absolutely useless. And that's why we are welcoming this, upcoming retail investor strategy of the Commission in the first half of 2022. I would suspect that those issues will be discussed then.
Yeah, I would fully agree to what Tanguy just said. I think we need to empower investors, and I think that's really a little bit when I look, for example, at consolidated tape, just to pick something out of the CMU action plan. I think we've discussed this at length, and I'm pretty sure if we continue at that rate, it's going to be a discussion that we'll have in 5 years from now. What we need is concrete action to create more transparency. For example, to introduce a standard where we will have 100% of trades actually reported, and for me as an institutional or end investor to see my print. In Europe, I cannot do that. I do not know where my trade was executed. And, it is something where we don't have any unified reporting standards, but we're discussing already how to consolidate some data that are not even there yet. So I think simply to lay out a path and a little bit of a vision on how to tackle things would be extremely helpful. And I think, yes, the guiding principle needs to be how to make it more transparent, how to make it more simple, and how to do steps that are meaningful in a short fashion, that are not putting things off 5 or 10 years.
Thank you. We're continuing to. Oh, Marcel, please go ahead.
Yeah, just maybe to add a bit of a Commission perspective. What we need is meaningful transparency, not the hundreds of pages of small print that is testing your eyesight rather than anything else. We need meaningful. We need meaningful transparency. We need cost-effective distribution, and we need an attractive choice of offers for retail investors to invest long term. I mean that would be, from our perspective, be the the priorities. And then when it comes to SMEs, of course, we need to look at the listing, at the costs that are involved in listing for SMEs, which are in many instances simply prohibitive. So just to chip that in.
Thank you. Actually, here's an interesting question, changing tack a bit. It's in terms of the breadth of CMU. And one of the things that I think Julio's chart in terms of green colors, yellow colors, and red colors, in terms of where progress is being made, one of the questions that comes up, particularly in smaller countries, is financial reporting issues as well as conduct-related issues. For example, will there be the question we're getting is, will there be CMU-related legal reforms for mitigating financial reporting misconduct? For example, it's 1 or 2 cases have happened in Eastern Europe, Scandinavia, and I'm sure it happens elsewhere as well. Will this be targeted within the CMU framework, or is this something being considered by ESMA? And then there's a second question, which is somewhat related, maybe for Marcel, and Isabel, in terms of the supervisory provisions and proposals within the action plan, does the Commission envision a banking union-like SSM body, or is it something a bit lighter touch, with leaving certain things up to member state NCAs? I mean, there's 2 questions there for anybody who's interested. Maybe the first question on the supervisory side of things, first for Marcel and Isabel, but also welcome Tanguy and Rainer to weigh in.
So if you like, I can start. On supervision, clearly that's an area in which we have to make progress. A capital markets union requires not only a single rule book but also a consistent application of the rule book across the 27 member states. And with the UK leaving the European Union, this will become even more important because we will move towards a multipolar financial architecture in Europe, and what we have to avoid is that there is a regulatory arbitrage or a regulatory race to the bottom. We have to ensure that the supervisory standards are the same across the 27 member states. That's a question of fairness, but also a question of protecting the public interest in this area. So the consistency of the application of the rules is a key consideration, and that's the ultimate objective of what we should achieve in our supervisory architecture. Now, this can be done in different ways. A single supervisor is the obvious solution, but it's not the only one. The Commission is burnt by the not entirely satisfactory outcome of our ESA's review. As you know, we met with considerable resistance from the member states when it comes to making progress in extending the supervision at European level. So we have to. This is something that we need to make progress on, but we have to approach this smartly, so that we can actually make progress and overcome or maybe address the resistance that exists in member states, and that's how we intend to approach supervision in the next year.
Thank you. Any thoughts from others?
I just to add a short comment. I consider it essential, it's vital to tackle the issue regarding supervision, and I totally agree with what just Marcel said. That is not easy at all, and that the ideal, which it's my position, would be to have a single supervision for sure. I mean, if we are trying to make a market attractive, we need to have one supervision. And then to have a clear set of rules to play in that market. So it's essential. But it's absolutely true that it's not an easy issue, that there are 27 member states who have their own position regarding this. But I truly would encourage the Commission. I know that is not easy, Marcel. I totally know it, that to have it as one of the priorities for sure. Because I truly believe. And then, Rick, you mentioned one that I call it the elephant in the room, which is the banking union. We are talking about the capital markets union, but if we don't really have a real banking union, essential in order to have a real capital markets union. And truth to be said is that, again, that's something that is not easy to achieve, and that there are different positions at the member states, and not all of them are in the willingness to make it possible for several reasons that are not the topic for this discussion, that some of them I totally understand, but others I doubt more. But I truly believe that they go hand in hand, the evolution of the banking union and the ability to fulfill the project of the capital markets.
Thank you. I think we have time for one more question, and I think there's two questions maybe targeted toward you, Isabel, in terms of the political climate. One is on securitization. And one is a question asking, why does there seem to be such surprising pushback against the proposals on synthetic securitizations? What is the political drive that's making some members of Parliament nervous about this? Because it's such an important issue. Second issue is actually getting back to the retail and the qualifications issue. One listener is asking, why wasn't there support within the Parliament for permitting opt-ins up into professional categories so that more investors can, for example, invest in private equity funds? Any thoughts on the politics? And then I'd like to close because I think we're nearing the end.
No, I'll be very short. I think both issues go, again, hand in hand. There's one of the things that it was the toughest for the negotiation and the report with the shadows from some other political groups had to do both with the categories of the retail investors and the protection of the retail investors and securitization, and all has to do with there's this general acknowledge that if we allow to implement a real framework for synthetic securitizations and for the securitizations, there'll be more risk, and they keep reminding themselves of the situation of the crisis in the US and the impact that it had on the small savers. And politically, not technically, but politically, that's a very strong political speech. And there are political groups who keep saying that if we simplify, we are deregulating. And if we deregulate, then the small investor will be at risk. So everything has to do with the perception of risk and with the perception of what securitization and the synthetic securitizations led to in the US crisis, the subprime crisis in the US. And that's something that is in the political debate and is constantly used by some political groups in order to fight against it. And with the retail, with the different categories of the investors, is the same. There's two ways. There's people who want to protect, in my opinion, way too much the retail investors, so they won't access the markets. And then there's others, which I include myself, which I believe we just need to treat the retail investors as adults, give them the information, give them the tools, allow them, if they wish, to take the risk.
Great. Thanks very much. I think we're running out of time. So in closing, I'll make this very quick. I'd like to make a couple of quick thank yous. First, of course, I'd like to thank our panelists and speakers, Marcel, Isabel, Tanguy, and Rainer, who did a great job in their opening remarks as well as their discussion. I thought it was very robust. I really learned a lot, and I hope the people on the dialed in have as well. I'd also like to, again, to thank Julio Suarez, who was the author of the KPI report, as well as his colleague in the research side of things, Matt Johnson, who did a phenomenal amount of work over a number of months, pulling this report together with the assistance of the other associations. So many thanks again to both of you for all of your work. I'd like to quickly thank again all the 10 associations who work with us. That's been essential, and we would like to continue that relationship. I'd also like to thank the members of AFME's CMU Steering Committee, particularly our chairperson, James Cunningham, who's done an incredible job spending time with us on a number of detailed comments to constructively provide feedback into a variety of forums, the high-level forum, the commission, working with Parliament members, and that's really been valued. I'd like to thank Pablo Portugal from our Brussels office, who are leads on our CMU advocacy side of things. I'd like to thank our communications team, who put together this webinar today. And again, we're delighted that 360 participants signed in and registered for the report. I'd like to thank our CEO, Adam Farkas, as well as our chairman, Michael Kofontaine, who are relentless supporters of CMU for all their visible work at the CEO and chairman level and in their circles for continuing to support the urgency of making CMU happen and the political ambition. As well as in final closing, I'd like to thank you, everybody today, for dialing in. We think it's been a very robust discussion. We hope you've enjoyed it. And please remember to keep CMU on the front of your in tray for everybody. So thanks very much. And with that, this webinar will close. Thank you.
Thank you, AFME. Bye-bye.